Welcome back. We are going to talk some money questions. What we're going to do with Daragh Cassidy from bonkers.ie. Hello, Daragh. It's lovely to have you here.
Thank you.
People can send in their questions if they want. 0896 111 111. We're going to start with just savings, deposits, everything that's going on. And leading digital bank N26, it slashed its deposit rates. What does this mean? What is N26?
Yeah, well, N26 is a German online bank, so it's kind of like the German version of Revolut, and they've begun to lower their savings rates. So savings rates, thankfully, have increased over the past 2 years, both in Ireland and the Eurozone, because interest rates increased. But what people probably remember is that in June, the ECB began to decrease interest rates, which led to a bit of a decrease in mortgage rates, which we all think is great, we all think it's brilliant, but we kind of forget that that also means that, unfortunately, when mortgage rates go down, savings rates usually go down as well. And up until recently, savings rates in Ireland, because of the competition, had been kind of holding firm. In fact, with some banks are even beginning to increase, but I kind of think that is now over, and N26 is first out of the blocks to start reducing its savings rates. And what I'm trying to say to viewers is, if you have savings, try put your money to work now, because those good savings rates are not going to be around, I don't think, for much longer. And just quickly with N26, for example, they were offering up to 4%. Now they've reduced that to 3%. If you have its top tier metal account, and if you had a standard account, it was offering 2.8%. Now it's offering 1.7%. So that's a pretty big reduction. And my fear is that the other banks, AIB, Bank of Ireland, they're going to follow suit over the coming months.
And will the ECB cut rates again?
I think they will. So in June, they cut rates by 1/4 percentage point. They held them steady at their last meeting, but I think they'll probably cut rates at least once more before the end of the year, maybe in September, and they could do it actually twice. It'll depend on the wider economy, inflation, but I would suspect, yes, that they're going to cut rates at least once more. And as I said, we always think that's great from a mortgage point of view, because lending rates are going down. Oh, isn't that great for first-time buyers? But we forget that it's kind of a double-edged sword, because it does mean that savings rates are going to go down as well.
So the bank always wins is a cliche for a reason, because a huge amount of people here in this country don't have their money in savings accounts that are making good interest. They also then weren't getting the mortgage, like it wasn't being passed on.
Yeah.
So the bank is winning kind of all the time if we are reticent about moving our money.
Yeah, we're reticent, but that's on us. That's not on the bank. So at the moment, Irish households have over 150 billion resting on deposits. That's a huge amount of money. It's never been higher. Now, look, not everyone has money on deposits. I get that. Some people could have 50 or 100 grand. Some people could have zero. But we've never had, as a nation, more money on deposits. But about 90% of that 150 billion or so is in accounts that pay practically zero interest, despite the fact that rates of up to 3% and above are still available. And this is one of the reasons why the Irish banks are so profitable. So I always say, if you don't want to do it for yourself, fine. But people get so annoyed in Ireland when they see banks making money. And I'm like, one of the reasons they're making money is because savers are doing nothing. Because AIB is like lending to people at 4%, 5%, and it has all of the savers' money. And even though it's offering up to 3%, because nobody has moved the money, it's paying practically zero. So they're delighted with life at the moment.
And there's a couple of things. I think people are kind of reticent, partly because they think it's a huge amount of work and admin and kind of financial admin, which is off-putting for people. And the other thing that I think puts people off is the idea you can't get access to your money. People they like the comfort of knowing, if I go down to the bank, I can get it.
Yeah, no, that's a good question. We actually did research. So bonkers.ie did research with Red Sea a few weeks ago to look at the reasons why people aren't moving their money. And one of the main reasons is, I don't want to lock my money away. Other reasons were, I don't know, there's higher rates out there. There are. Others were kind of like, I'm too lazy. It seems like it's too much hassle. But a big reason that around maybe 25% of people said why they hadn't moved their money was because I don't want to lock it away. What I would say, though, is that you don't have to lock your money away for like 2 years, 3 years, 10 years. With some of these rates, you're only locking your money away for maybe 6 months to a year. I'd argue that year can come around very, very quickly. Now, sometimes people will think they'll need instant access to the money, but quite often, like even if you're buying a house, I mean, the house buying process can go on quite a long period of time.
Yeah,
so even not being able to access your money,
just gaslighting her now. That's kind of a bit unfair.
It isn't the end. But I would say, though, I mean, Bunk has 3.36%. It's offering that is instant access. N26, yeah. So they are a Dutch online bank, so kind of like the Dutch version of Revolut.
Okay.
So we've had Revolut, the German version of Revolut, and the Dutch version.
Okay.
I know there's a lot of names being thrown around, but they're offering 3.36%, and that's an instant access rate. So you pretty much have instant access to your money.
And traditional banks are doing it as well, or would you have to put it away for 3 years?
Yeah, they're a little bit more, you kind of have to lock your money away. Okay. They're a little bit more like that. But PTSB has one now where you get all your interest up front. It's called Interest First. I thought that was quite nice. That's 2.75%. It's 1 year, I think, but you get your interest up front. And with some of the banks, it's only, with Bank of Ireland, it's maybe just only 1 year, 2 years, and you can access 25% of your money if you need to.
Okay, as everyone's rushing to change their banks and get themselves some savings right now, do you have more questions for Daragh? We've got quite a few in already because Daragh is going to stay with us to answer your questions. You can get in contact. It's 0896 111 111 and we will be answering them very shortly. Earlier on, we asked you for your questions regarding all things money.
Joining us again to answer those questions, Daragh Cassidy from bonkers.ie. So Daragh, let's jump in. Look at this now. Question 1 for a well-organised person. I'm 25 and I started paying into a pension at the start of the year. Yeah, round of applause. What is a good percentage of contributions to be paying monthly to have a good amount at 60 years of age for retirement?
Yeah, so it's great to see someone as young as 25 to be thinking about a pension, because the earlier you start, the easier it will be. And if there's anyone, viewing who has not started a pension, do it, because it is just so important. I think at that young age, 5% is a great place to start. Remember, on pension contributions, you get tax relief. So what that means is you just don't pay tax on the contributions that you make up to a certain limit. So if you are pulling in €100 a month, the net cost to you may only be actually €60 or €80, depending on if you pay tax at 20% or 40%. It seems a little bit complicated, but what it means is that often if, like I'm saying, you have to pay 5%, it's not going to look quite so bad. Now, if you have a good employer, usually when you pay into a pension, they'll match the contributions. So I'm hoping in this case, the viewer, she'll pay in or they'll pay in 5% and then the employer will match that. So actually 10% would be going in. So that would be a great place to start at the age of 25. Now, if the employer isn't matching the contributions, so she's doing it herself, they might want to pull in a little bit more. But listen, to be talking and thinking about a pension at 25 is great. The earlier you start, the cheaper, the easier everything it'll be.
Yeah, absolutely. I'm so impressed by you. Huge bull of us on that one. Question here, where is the best place to save money for your child's future? I am currently using the credit union.
The credit union is a great place. I'm a big fan of the credit union. Lots of Irish people are. When you're a member of the credit union and you're saving, it obviously means as well you can then go for a loan if something should happen. And I think what's great with the credit union is that, they don't always say a computer says no kind of approach. It's the human touch, and they'll work with you in your hour of need, shall we say. Just looking obviously on bonkers.ie, you can check out the best savings rates. There are rates, as we've kind of discussed, of between 3 to 4%. Raisin is a good place as well to maybe look at pulling your money. So that's kind of like an online marketplace for savings accounts across Europe. And what that means is that you can kind of easily access the slightly higher rates of interest that are on offer from other European banks. So I always think that's a great, Would
you have to be putting in a certain amount in order to get those higher rates of interest?
With a lot of the Raisin accounts, it is a lump sum, but they do have some regular savings products. Another point, though, is that if you have a longer-term savings goal, maybe investing in what's called a managed fund would be a good idea, because if this is for the children's education, that could be maybe their college education, so it could be 10 or 15 years away. And what a managed fund does, they're sold by the likes of Irish Life, Aviva, Zurich. You can put in sometimes as little as €100 or €200 a month, and it would invest in a mix of stocks, bonds, shares, and it just means that you have the potential for slightly higher growth. Now, what can go up can obviously go down, but usually if it is a longer term goal that you have, that's another option. Because it just means that, like I said, you have a potential for more growth. So you could get maybe 7 or 8% a year as opposed to just maybe the 3 or 4% that we're talking about with just a regular savings account. But obviously get good financial advice, because when you're investing as opposed to saving, there is a little bit of a risk there.
Yes, and Joxer goes to Stuttgart Credit Union is absolutely fine.
Yes.
Yes.
I'm trying to save money and pay off my credit card debt. Which one should I prioritise, as it's too hard to do both?
This is a little bit complicated because it depends on a little bit more information, but usually, a problem that Irish people have, or a mistake that Irish people have, is that they might have 10 or 15,000 euro in savings, and then they also have 10 or 15,000 euro in debt. And the interest that you're charged on your debt is going to be way more than the interest that you're getting on your savings. So usually I would say to people is always be paying down your debt, particularly the debt that has the highest rate of interest first. So credit card debt, overdraft, and so on. Having said that, though, everyone needs a rainy day fund, and there's no point either in, let's say, using all of your savings to clear all of your debt, and then God forbid something happens the next week, maybe there's an accident, an injury, and then suddenly you need access to money, but you don't have it. So usually people recommend a rainy day fund of around 3 to 6 months your net disposable income. So if you were getting maybe 3,000 euro into your account each month after tax and so on, that would be anywhere from maybe 9,000 euro to 18,000 euro. Now, obviously, that to some people would be a lot, of money. But so in this case, I guess it's, do you have a rainy day fund? Because if you do have a small rainy day fund, then I would say pay off the credit card debt. But if you don't have a rainy day fund, really, you should be building up a rainy day fund first and foremost. So there's no kind of easy answer, if that makes sense. But so the thing is,
but credit card debt is crippling.
It can be, but it is important that you have a rainy day fund. So in this particular instance, if the caller doesn't have a rainy day fund, then they should be continuing to try and set that up and build up that money. And then if they do have it, then obviously start paying off the debt. Okay,
and we've got time for one more question very quickly. I've got 25,000 euro in regular savings account. I'm putting in 200 euro a month, but I'm getting absolutely no return. I'm in my 70s. What should I do?
So 25,000 isn't an insignificant amount of money. There are rates, as we've discussed, of 3 to 4% on offer at the moment. I know AIB, they may be a customer of AIB. They're offering just over 3% over 2 years, I think it is, for people who have at least 15,000 euro. So if this caller was a customer of AIB, they could put the money in there and get just over 3%. Raising, as we've discussed, is another option. Potentially as well, doing something else with your money. So maybe investing in energy efficiency improvements in the home. At the age of 70, though, not to be too negative, you do sometimes have to start thinking about the return, so how long you're going to be around. Because I would always say that retrofits aren't necessarily cheap, and the payback return, it can be several years. So you kind of have to just put that into consideration. But sometimes maybe just new windows, improving the house that you're in a little bit, so that your energy bills, which are still really, really high, go down. That might be another option as well. But definitely with 25,000 euro, it's not an insignificant amount of money. If you go on to raising.ie, bonkers.ie, there's lots of options out there for you to earn around at least 3 or 4%.
3 or 4% in savings account, like we were talking earlier on. Daragh Cassidy from bonkers.ie, thank you so much. Cheers. Thanks very much. And thank you for getting in touch. We love when you send in your messages. We really do appreciate it.